This is the Rich Dad Stockcast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Hi, everyone. Before we get into the Tesla Bitcoin stock story, I do have a warning. There, again, is a clown in our comment section who's a complete fraud. He's writing as the Rich Dad Company, and he's total BS. Basically, he's trying to steal your money. So in the show notes, I placed a link to the Real Rich Dad YouTube channel. So make sure you use the link in the show notes, not the link in the comment section. All right, I'm done. Now let's get on to the show about Tesla marrying Bitcoin. Maybe the strangest marriage you'll ever see. So this show will really explore the Tesla stock. And why is that? Because according to the Wall Street Journal, Tesla posted its first full year profit. And that's really exciting because Tesla's been a stock market darling with very high price stocks, no dividends, never producing an annual profit. So it's a little bizarre. So if it was high priced before with some sketchy fundamentals, what price could it soar to now that it's producing a profit? Or, as we always must ask, is something else going on? Tesla announced its earnings for 2020 on January 14th. Let me rephrase that. Tesla announced its first ever annual profits on January 14th, but, and this is confusing, the stock price did not jump. It didn't jump astronomically. In fact, it went flat. So on the day of the announcement, January 14th, the stock was at about $865 or $845. But 25 days later, basically early February, the stock was at $865. So basically no movement. And then to make it more confusing, there's the marriage between Bitcoin and Tesla. What is that about? Because Bitcoin mining is one of the most polluting processes on Earth, and Tesla is all about green energy. So big mysteries here. So we're going to have to bring in our own stock professor, Andy Tanner. Welcome, Andy.
I've never been called a professor before. The only way I'd fit that term is I guess I profess certain stuff from now and again.
Well, you're my professor.
It's great to be here, Greg. And this is a great conversation where, one of the things that my mentor, Robert Kiyosaki, has always taught me is to go big picture. And so we'll talk about some of the details about Tesla to the extent I know and confess on the things I don't know. And then I'll give you some big picture ideas that can apply, I think, not only to Tesla, but investing in general. So this will be a fun conversation. It's, the fun thing about being involved in markets is you never know what the week is going to bring. It's not the same old. There's new technologies and new policies and shifts in the world. And, it's always, there's electricity. I'm not a person that watches things like Bloomberg or CNBC all day. I have friends that have a big screen on their, wall and watch them all day long. I tend not to because I'm not, a day trading type of minute by minute guy. But when I do watch it, that sounds like a Mexican beer Cerveza commercial. But I don't often watch it. But when I do, there's a lot of electricity on there all the time, and particularly to get viewers. But the truth of the matter is there's always things to talk about. So this will be fun. So
Andy, but before we dig in too deep, I'm assuming you do not own any Tesla stock.
I don't own any Tesla stock. I think in our mentor club, we've traded it a bit because there's so many people interested in it and there's opportunities for education in it. But no, I don't own any Tesla. I've never owned any Tesla.
It never made sense to me, especially since there's no dividend. Like we said earlier, it doesn't produce a profit, and yet the price on that stock is sky high.
Well, let's talk about what value is. And this is Tesla's a beautiful example to talk about value investing. What is value? And the best book I've ever read on value investing is Benjamin Graham, The Intelligent Investor. I recommend that over and over to people. I don't often do encore reading. I have a storage unit with lots and lots of books. And I just keep a handful of books here in my office because they're the ones I'll go and refer to, get up on the shelf. Otherwise, I'll read it once and put it in storage or give it away or whatever. And in that book, Value Investing, he has another book called Securities Analysis, which is more in depth. But both of them really boil it down to this: is, price is what I pay, and value is what I receive. That's a really good way to think about it. Price is what is sending out. That's the cash I'm sending out, and whatever I get back is value. And so I would say three things about it. Number one, value is in the eye of the beholder. Um, I tend to value experiences over things. I, don't buy exotic cars. I don't, have a lot of I don't wear jewelry. I don't even wear a wedding ring. My wife doesn't care because no one would be interested anyway. But I'm not a jewelry guy. I have some watches in the closet, but I invest in experiences. So value. So when you look at buying stocks, I think part of that is, what do you value personally? There are a lot of public companies that you might not invest in. Maybe someone feels that investing in Philip Morris is not a company because you wouldn't want your kids patronizing Philip Morris,
Because
right?
that's a cigarette company.
Yeah, yeah. And so, maybe, if my son went to buy stock, I don't even know if they have, if Playboy magazine is publicly traded anymore, but maybe I might say I'd rather have him trade the stock than see the magazine. I don't know, I mean, other people don't care. And it's just, so that's the first thing. When you look at a company like Tesla, you might want to own them just because you believe in what they do, and have a few shares.
The value doesn't always have to be dollar. It can
Yeah,
be
values in the other.
emotional.
Now, if you read Benjamin Graham's book, what you're really paying for is a couple of things. They look at it as a box, really, just generic box at first, and say, are there any earnings here? In other words, am I investing in a company? If you look at the BI triangle, Robert's BI triangle, and the 8 integrities of that, the bottom line here on the inside triangle is cash flow. And if an entity isn't cash flowing, if cash isn't flowing in and out of that business, and they have a negative cash flow where cash is flowing out, it's not going to be a viable thing to own. It's just not going to survive for very much longer. It's very important. You have your income that can do it. You can have your assets sold off, and then your debt brought in. And after that, you can only sell so many bonds to bring cash in. So
Isn't that the situation with Tesla?
Tesla's, we'll talk about their profit. We'll talk about a little bit. I don't know a lot about it, but I'll tell you where that came from. The second thing that Graham teaches in that book is growth. So there's some speculation there. Snowflake hasn't turned a profit yet. They're a software company that had an IPO. They don't pay a dividend. They haven't earned any money yet. Warren Buffett bought them. He got in on the IPO. So he sees potential for growth. So even if a person had, let's say, negative earnings, but that deficit was shrinking by 20% a year, well, they're on pace to turn a profit and go 20% the other way. So even if you have a company that is earning a small profit or no profit, that growth is valuable, isn't it? The potential of something is valuable. When my wife met me, I don't know that there's been any change in 20 years, but I don't know what interested her. And maybe she thought, well, maybe he might go somewhere someday, because there certainly wasn't profit financially. I had a good sense of humor. That's about all she had to rely on. And I was tall, so she could wear heels. Other than that, it was all, it was all bonus from there. So you look at earnings and you look at potential. You look at a company like Procter and Gamble, or even more, a food company, perhaps, like Nabisco. Okay, what's their innovation? There's opportunities always to innovate, but if you're Procter and Gamble, if you're Kimberly Clark and you sell toilet paper, you had a nice pandemic year, but are you really going to innovate tissue paper? In my lifetime, it hasn't changed that much, not at all. So when you have a guy like Elon Musk, who absolutely history will treat him as the Henry Fords, as the Steve Jobs, as the Bill Gates. I mean, when you look at the Thomas Edisons, when you look at American industry and pioneers, Elon absolutely might even be on the Mount Rushmore of that stuff. The stuff that guy's done has been huge. So right now I'm looking at my screen where we've got a price earnings ratio of 1257. So that means if Tesla is a box and every year that box spit out $1, the price tag on that box would be $1,200. So you
Wait. So if I'm an investor and I put in $1,200, it'll produce one.
produce $1 earnings, and that dollar earnings goes back in the company for growth. It doesn't come out as a dividend. So even in the dividend, there's some metrics that show you how much of the earnings gets paid out to dividend, and there's of course a zero. Apple was like that for years and years and years. But once a company starts putting money in their coffers and they've got billions of dollars stowed away, the investors start saying, hey, now, we believed in you. Come on. And that's what happened to Apple. There's a company I own called First Solar that's in that situation. They got a very strong balance sheet. I think there's pressure on them to start paying the dividend. And that's why I bought it now or earlier low. So when the dividend pays me, it's a good investor yield. So you either think one or two things are going to happen. Either you think that you're going to live for 1,200 years for that to give you money back more than what you spent and turn a profit, or you believe that there's 1,200% growth potential in that company. And I'd say it's the growth that investors are investing in. And Elon Musk is a very vocal figure. You have investors like Jim Simon. No one's ever heard of him, and he beat Warren Buffett hands down. He's way more successful return wise than Warren Buffett is, way like twice, double. But he's quiet. Elon's one of those Mark Cuban types, who likes to tweet and likes to be out there and likes to make his presence known. So that celebrity makes him attractive, and he's brilliant. I mean, the only reason I haven't invested in Tesla is I just think that I like cash flow and I like to sell options, and Tesla's a little volatile for an option seller. For my style of what I like to do, it's kind of all over the place. So it's a little volatile for my, maybe that means I'm skittish and a wimp, but Tesla doesn't appeal to me as a stock. Way appeals to me as a company. My dad drives a Tesla. My wife wants one. I don't know. I like those. I'm kind of a V8 guy, but yeah, Tesla's an awesome company. I'm going to buy some Tesla walls. I'm putting an addition on my house, and we're going to put some solar in it because I love the Tesla wall. I mean, SpaceX, what's not to like? So as you look at that as an investor, you probably don't put all your money in Tesla, I wouldn't imagine, because it's so volatile. But could they have that type of growth? Absolutely. I mean, Amazon is still growing. If you can imagine, that behemoth is still growing. Their PE is probably close to 100 or so.
Andy, can I take you back to something? So if it's for every 1,200 you put in and spits out a buck, how is it that they produced any profit?
Well, you know more about this than I do probably. One of the big deals that I'm still learning about is apparently, I'll give you an idea. Look at Josh and Lisa Lannon's business. I don't know.
Those are advisors with Rich Dad.
Yeah, they have a great business. I don't know that, if you are a person struggling with addiction, your employment situation might not be good. And I don't think it discriminates just, to rich people. I think people of all economic situations can follow that. So I'm sure there's probably some government subsidy somewhere, or maybe it's a volunteer thing like a Wounded Warrior Project, or who knows. But there's all types of sources that can purchase things and bring money into a company. And one of the things that can bring money into the company is tax credits and tax help and incentives. Governments certainly can send money wherever they want. Fiscal policy is about who to take money from and who to give it to. It's the redistribution of wealth. Who do we tax the most? Who do we tax the least? Who do we not tax? And once we tax everyone, what government contract, who do we pay? Do we just pay government employees, or we do hire people and give them what's called a government contract? Or are there tax credits and tax benefits? So apparently, certainly they've had sales of cars. but apparently they've received money from other sources. I don't know that that's demonic or illegal, or, it doesn't bother me. But where Tesla has a hard time right now is with their brand message. Is their brand is green, 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 independent, all these good ideas. But I'm sure they have a carbon footprint at Tesla. I'm sure that Elon's flown in a private jet before and didn't drive his electric car across country.
Well, that's really where the Bitcoin purchase comes in.
Yeah, that's a big deal.
So the Bitcoin, from my understanding, the mining of Bitcoin that goes on right now takes more energy than I think the Netherlands combined. And my understanding is a lot of that's done in China, where they tend to use coal. So the pollution they create by buying Bitcoin is really contrary to the green message of their company.
It's interesting how people are. I don't really like to weigh in on this much stuff because, the two things you can talk about that are, religion and politics are just conversational nitroglycerin. People get emotional, they freak out, and then they can't learn anything. I think that's one of the worst environments for learning. When emotion is high, intelligence is low. So I stay out of that stuff. But the problem you always have is, I want Nike shoes. I want my kid to have Nike shoes. They're cool. Michael Jordan wears them, blah, blah, blah. Oh, but look, they're made in China with child labor, all those stories. Oh, I love Walmart's low prices. I love that I can go there and get things cheap and buy Huggies for my kid. But look at look at the labor issues they have. Oh, I really, what if Elon Musk was buying gold? I mean, mining strips. I mean, mining is if you've ever toured a mine and a smelter, okay, that's one of the most toxic, most awful places. It's like going to a different planet of poison and, total environmental train wreck. So if he was buying gold, or if the US was buying gold, and then who you associate with now has become huge. I look at my friends and my mentors. Um, I reserve my right to take the good of what people do and discard the bad of what people do. I reserve my right to do that. If my sons see something good in me, they can embrace that, and they see something bad in me, you can't, like, we want to be guilt by association. Well, he bought something from China, or he did business in China, or that's kind of how people are. Yeah, you want low prices. Yeah, you want a good life, but you're going to nitpick the hell out of everyone. Look, Elon Musk is a businessman, and he has to hedge. And if he sees an opportunity, if he sees a possibility, not an opportunity, that there'd be pressure on a currency and a dollar, oh, you're going to buy gold? That's worse. He might be looking at the lesser of two evils: is how do I keep my good stuff going? And sometimes you take a step back to take a step forward.
Can I ask a question? You started this with value investing, and how does the purchase of the Bitcoin fit into value investing?
Well, value is what you get, right? Price is what you pay. So when you receive a Bitcoin, what do you have? Well, you have a digital currency that has been voted given a vote of confidence from the world. And anything can be money if other people share your value. There's things that I value that nobody else does. For example, as a basketball coach, I value playing defense still. The NBA doesn't value that at all. You would not see a lick of defense in the All-Star game, not a lick. And so I'm alone in that, right? And so Bitcoin is not alone. For the time being, there's a lot of people that value it. And that's the bottom line: is you're getting a currency that other people find value in as well. And the reasons they find value in it is probably its decentralization, its portability. And so, yeah, if Elon Musk wants to invest and take a position in Bitcoin, he's free to do that. It's a lot like what you get when you invest in Berkshire Hathaway. When I invest in Berkshire Hathaway, I get Dairy Queen, I get Fruit of Loom underwear, I get Geico insurance, I get Duracell batteries. I get a lot of companies that aren't even publicly traded when I do that, because it's part of their holdings. So if I invest, there's some funds that invest in Bitcoins. And if you buy that fund, you're invested in Bitcoin, as a derivative.
Okay.
So, right now, Elon, I like Elon Musk. I think he's a brilliant. I think our lives are better because he was here. But the problem is when you declare that you're a green guy and you're an energy producer, now anything you do is going to come under scrutiny by the haters of the world, usually people who are not as educated or have no empathy for, hey, he's in a difficult spot. Give him some chance to figure stuff out. But
So the Bitcoin goes on the balance sheet. And then as the price rises and falls, does that have anything to do then with the profitability of the company? Or if it's on the balance sheet,
probably
is it?
no, you have something called, this is getting too wonky, but there's something called price to tangible book. And price to tangible book, I gave a price earnings quote, right? This is how much you pay for the earnings you receive. Really, like in our 4 pillars class, we teach this in detail, okay? And there's lots of ratios. For example, when I buy a company, I get the earnings. I also get the sales. I also get the debts. I also get the liabilities. I also get the expenses. And I also get the balance sheet. If someone were to buy my Andy's life, right, he'd get everything that was good and bad with it. He'd get my debts, he'd get my profits, he'd get the gold I own, he or she. So what price to tangible book is whatever's on the books is probably where that term's come from. Is if you have Bitcoins on the books, that's part of the tangible book. And so how much do you pay in price? Well, what's the book value of that company? So I would imagine if they put Bitcoin on their balance sheet and list that as an asset, as that goes up, shareholder equity would rise because that's asset minus liabilities, and the book value would rise. So your price to tangible book and your price to equity would become more favorable. I don't know that they would call that earnings. If they sold it, it might be a capital gain in earnings where they could call it earnings at that point if they sold it. But just by holding it and having it rise, and they have pretty complex accountants. Those accountants can count and move their stuff around almost any way they want, I'd imagine.
Okay, this is my last question for you, and then we'll wrap it up.
Yeah.
They also, Tesla creates carbon credits because they are a green company. So they get these carbon credits and then they sell them to other polluting companies
No.
which need to buy them to pass government standards, from my understanding. So I'm assuming every year he makes these credits and he sells them. And my understanding is that's why they did turn a profit. If they can do that every year, then do they put that on the books and that's considered real profit and eventually it gets to the investors?
It's an interesting thing because on the one hand, you can say, well, why are you making money by doing deals with the devil, guilt by association? But on the other hand, you're like, hey, I have a carbon credit because I reduced the footprint of the world. I did something good and I'm going to get compensated for doing something good. So you could look at it both ways. ExxonMobil is going to be very interested in buying that type of stuff and doing that type of stuff. So, it's kind of like when we went back to the end. Do you want to buy Philip Morris? Well, how do you feel about it personally? Right? Some people would never say, well, I'm not going to invest in Toll Brothers because they use lumber and lumber cuts down trees, and I don't think we should cut down trees. And so it really is one of the beautiful things about a stock portfolio is you get to invest in companies you really care about. My sons know what we own. And so when we have those products in our home, they feel good about it. Or when they see them in the store in other people's shopping carts, they get excited. If you own some Disney and the lines are long, you're pretty happy and you feel like Disney did some good things. Maybe other people say, no, they're brainwashing our kids and exploiting people for materialism, and values in the eye of the beholder. And I allow everyone to vote their conscience with their dollars. They have the right to do things the way they want to do them, right? They have the right to do that stuff. So I'll turn that off. So I leave that up to everybody else. My job is not to weigh in on what is right or wrong. That's not my job. My purpose is to help people learn more about investing and learn what a PE ratio is, learn what a price to tangible book is, learn what investing in growth as opposed to investing in earnings is. And then I'm happy with people to buy or not buy whatever they want to do. I really love individual freedom. And so if a person wants to buy Tesla, I have no problem with that. I haven't bought them. My reasons for buying them haven't been because they do a deal with China or buy Bitcoin. My reasons is they need a lot of growth to justify that PE. And as a result, their stock is very volatile. And as an options guy, that amount of volatility is just hard for me to deal with in my style. So I love Elon Musk. I love his company. I'll probably spend more money with his company before I die. And there you have Tesla. I don't know if that was helpful to people, but the big picture thing is how do you value a company? Do you just buy something because it's in the news and trendy and cool? Or do you marry that with an understanding of what we call fundamental analysis, kind of understand, at least on a basic level, where their company is in terms of profitability and where those profits come from?
Gotcha. Well, Andy, that was a crazy topic. Tesla and Bitcoin all mixed in there.
Yeah.
So thank you very much.
Always great to speak with you guys. I hope people got something out of this.
My head's still spinning a little bit, and you, as always, you took it a different direction. It wasn't just money in your fundamentals. Your valuation also included ethics, morality, and what you can be proud of. So once again, you took it a different direction than I was expecting, and that's why I appreciate these times together.
Thanks so much, Greg. We'll see you next week, man.
All right. Hey, and don't forget, Andy's got some free courses in the show notes and a free book. So everybody get those. All right. Thanks, guys. Appreciate you listening.
All right.
Bye.